Join us right now, Mark Fields, the former Ford CEO, also a CNBC contributor. It's great to see you, Mark. You've been, dare I say, skeptical, maybe is the polite way to put it, about Tesla over time. I'm curious what your take was on these earnings.
Well, Andrew, I thought, relatively speaking, they hit record earnings. It was a relatively good quarter, even despite, a lot of the issues, supply chain, demand in China, et cetera. I think, to me, the most impressive thing is if you think about the trajectory they've been on over the last couple of years, their first full year of profitability was back in 2020, and they made about $720 million. This year, they made over $12.5 billion. And right now, that's more than what's projected for Ford or GM. So it's quite impressive what they've been able to achieve between that and building up to 2 million units of capacity at this point.
Okay, so does this change your view at all about the valuation of this company?
Well, I think, this company has been valued much more as a tech and software company than a regular car company. I think what you're seeing now, they're experiencing what it takes to compete as being one of the big players now in the auto industry, which is when you see demand go down, how do you stoke that demand, the impact on your margins? And I think investors are looking at this and saying, should we go forward and continue to value it as a technology company and the growth involved, or should we value it as a traditional car company? But I think what Musk has said is, listen, with these price cuts, we have the advantage of scale versus the established automakers. So even if you want to, look at me more as a regular automotive company, look at my margins versus the competitors, because these price cuts are really going to put a big challenge for the traditional automakers who are now launching their EVs.
Well, so and that's the question. Can the other automakers cut prices in the same way? I don't think they can.
Well, they're going to have to respond, Andrew, in one form or fashion, because the way consumers shop and they cross shop, it's based on price. They're looking at a price range, and if your product doesn't fall within that, you're not even being considered. So I think the automakers, the traditional automakers, their challenge is, is to get to scale. When you ramp a plant, it's really important to ramp it up fully, get it stabilized. That's when you can really start working on cost efficiencies within the plant and with your suppliers. That's what Tesla has been able to do. And so I think the automakers, they're going to have to, Tesla went through what they called production hell to get to scale. The established automakers know production at scale, but it's not going to be a cakewalk for them. So they have to get that volume, which means they have to be price competitive.
Mark, can we talk cruise control and self-driving? I don't know if you saw this. Your former company, Ford, coming out of the top of a Consumer Reports list, I think it was just yesterday, that the sort of automated cruise control, which is not necessarily as advanced as what Tesla's doing, for example, in terms of full self-driving and the like, but actually came out on top. Tesla fell to number 7 because Consumer Reports didn't really like the fact that you have to put your hands on the wheel, but that they have no cameras looking at people's eyes. Did you see this? They actually put Ford and GM, or I think a Cadillac, at the top 2 slots on this.
Yeah, when you look at the self-driving capabilities or automated driving capabilities, and somebody like Ford and even GM, those systems are very easy to use. Listen, the automakers, the established automakers, have a lot of experience with cruise control, adaptive cruise control. They understand how consumers are using their vehicle. And listen, safety is top paramount for the established automakers. And I think you're seeing that in this report that you mentioned that came out, that the usability of it is really good.